Good morning, everyone. I'd like to call to order the Finance and Audit Committee meeting of the Dutchess County LDC. Jasmine, if you take a roll call, please.
Kathy Bauer.
Here.
Here.
And next on the agenda is the minutes from the September 30th, 2022 meeting. If everyone's had a chance to look them over, are there any corrections to be noted? Okay. With that, do I have anybody willing to make a motion?
I'll make that motion to accept the minutes.
And I will second that motion. Jasmine?
Kathy Bauer.
Approved.
Approved.
And next on the agenda, we have our 2022 audit. With us today is Shannon Menonese from RBT CPA. Shannon?
Morning. So on page 1 of the financial statement is the independent auditor's report. So the first paragraph there talks about how you have a clean opinion on modified, which is what you're looking for. I would like to point out, though, this year you have an emphasis of matter because the LDC did have to implement GASB 87 in regards to leases, but we'll talk about that a little bit later. Pages 2 and 3 are just the remainder of the audit opinion. Pages 4, 5, and 6 are management's discussion and analysis of how the year went for the LDC. And then if we start on page 7, this is the statements of net position. So your current assets are comparable to last year. Something new is that you'll see for 2021, the column says restated, and that's due to the implementation of GASB 87 for the leases. So you will see a new intangible right to use asset for $647,000 for 2022 and $725,000 for 2021. So with GASB 87, the standard requires entities that have leases that are material to put on an asset called this right to use asset, and then the lease liability. Previously, it was run through the statement of revenues, expenses, and changes in net position. So that's no longer the case. It is on your assets and your liabilities. And then your interest, expense, and amortization will run through your other statement. So overall, your total assets, even with this implementation, are fairly consistent. You're only down about $100,000. For your liabilities, you now have the long-term and the short-term portion of the lease liability. So your lease liability short-term portion is $60,703, which is what will be due or expensed or amortized in 2023. So that's just showing what 2023 will have. And then the remainder is that $636,000 noted as the lease liability net of current portion. So your total liabilities for 2022 are $752,000, and your restated for 2021 are $773,000. And had we only presented 1 year, you wouldn't have had a restated 2021, but everybody likes to see where their numbers are in comparison to last year. So that's why we're presenting the restated 2021 balances. And overall, your net position is $2.8 million. So you're about $100,000 less than where you were last year. Any questions on that? Is there a lot of new information that was not there last year?
So basically, you just, the lease is almost like a mortgage.
Pretty much, yes. Yep. Except for at the end of the day, you don't get to own the space.
Exactly.
And it's not just for spaces that you do lease. It could be for copiers and anything else. It's just whether or not it's material. So it could be cars, it could be anything technically that comes with a lease contract.
Got it.
So page 8 is your statement of revenues, expenses, and changes in net position. So overall, you can see your operating revenues are up. This is due to some increased funding from the county, and then some sponsorships for the events that were held. Your total operating expenses, again, are up slightly, and that's to the events that were held. That's really the advertising and marketing line there. I believe it was the BEA.
Yeah.
And
we did 3. We typically do 1 event, but we had 3 events last year. So we did a networking breakfast. we did Accelerate, Duchess.
Yep.
And the DEAs.
in the BEA, so that's why that's up there. So your operating loss is 78,613 for 2022, and last year it was 194,000. So you cut that down, and you will also see that the amortization of the lease is up there as well. So what it used to be in the occupancy line, but it's now your amortization expense. So really, you just have it's reclassed technically from where it was last year. And then your non-operating revenues and or expenses are 21,795 for interest income, which is up significantly from last year, and your interest expenses is comparable to last year. So you've cut your net operating expense by $20,000. So your change in net position for 2022 is a loss of 88,000, and for 2021's restated it was 224,000. So you've closed the gap on there. But again, you have a very strong net position. So at the end of 2022, you have $2.8 million in your net position. So overall, a very strong financial position. Any questions on that? Okay, so page 9 is just your cash flows. It shows you how your income or how your money came in and went out. Overall, you just had a net decrease in cash of 25,000 from this perspective. Last year it was 362,000 for the restated 2020. Page 10 begins your disclosures. So on page 11, you will see a new disclosure regarding the lease. It just gives some key facts about what the new reporting requirements are and how everything was calculated. But on page 12, you will see now that your asset is reported under the capital asset section. So you will see an intangible right to use asset there for the 803,000 that stays consistent. And it discloses your amortization expense as well, which will remain the same. It was $77,740 for both 2022 and 2021. On page 13 is the new leases liability footnote. So it breaks out what the future principal and interest payments will be for renting the space. So you have opted to extend your stay in this particular space to 2031. So the total liability there will be $838,000 because that includes $141,000 of interest. Any questions on that? Okay. The rest of the footnotes are very similar. Note 4 gives just the breakout of the professional service contracts, and you can see again, like I mentioned before, your Dutchess County funding is up. And note 7, the new reporting standards, same thing as we talked about in the IDA. The new statements are 94 to 101. We don't believe any of those will have a significant impact on the LDC, and it just states that you guys did implement GASB 87 over 2022. So page 15 is the schedule of conduit debt. You have significantly more on this entity than you do the IDA. So you'll see you're at 1.3 billion there at the end. And you had a couple of new issues or drawdowns. One would be for the culinary and another one for Maris. So not that you added, but 68 million was added during the year. So this is debt that you're on the agreements, but it's not actually the LDC's debt. And then starting on page 16 is just the project information, your FTEs. Any questions on that? And then lastly, the last page is page 20, just shows that the LDC did not have any internal control or compliance.
Any questions at all from anybody?
Nope.
All right, would anyone like to make a motion to present this at the next board meeting?
I'd like to make that motion.
And I will second that. Jasmine?
Kathy Bauer.
Approved.
Jim McCollum.
Approved.
Any old business? No. New business?
No.
Then we are adjourned. Thank you, everyone, for coming.
Thank you.